All right, so let's get into talking about levels, how I personally develop my levels, and then during the process, feel free to jump in with Q&A if you have questions relative to my whole process. So I will use MES for this exercise. If anybody wants to use something else, let me know now before I kick this whole process off. MES works for everyone, I guess. I think my SPX charts may have a bunch of notes on it, so let's see if I can lose anything. Let's lose this. I can do that again, and I can do these again, those drawings. I will keep these levels because they're important for my needs, but I can get rid of this one from today. All right, so everybody can see my three grids perfectly fine. On the left, I have a monthly. In the middle, I have a weekly. And on the right, I have a daily. So one of the first things I want to do is I want to understand the big picture of the market. So let's switch this. Actually, no, let's just make this bigger. Just give me more real estate on this one. Come on. All right, so we can see enough here, right? So big picture, SPX and SPX. All right, so big picture SPX. What am I looking for? It's important to understand these drawdowns, right? What are these drawdowns relative to what was going on in the markets? So I just know based on this drawdown, this is my pre-COVID high, and this is my COVID low. So I'll be very interested in a floor here, and very interested in a floor down here. Okay? So first thing I'll do is, okay, let's see COVID swing. So when COVID hit its low, so it's high and I'm looking for a retracement, I can retrace all the way back down to 3,100. All right? But that's a bit deep. So of interest to the markets are always the 382s and the 50%. So you always want to know where those come in at. Big picture. The market is very interested to make sure that it never loses a 3.8 level. And just so you understand, and to everybody who have seen my retracement tools, can you guys see this clearly okay? Might be hard to see, I'm not sure. So of interest to me are always 382s, 50%, 618, and 100s, 123s, and 138, and then finally 161. So for me, those are my key levels that I will always want to watch, and those are key levels that are always important to the markets. All right. So if your fib tool or your fib retracement doesn't include those values, I would encourage you to include those in your fib tool somewhere. 382, 0.50, 0.618, 764, and 854 are intermediate ranges. If you want to add them, you can. But oftentimes the markets will try to find those little intermediate levels to go hide and sit as it attempts its next move either up or down. Then obviously 1.0, as you guys have seen, my 1.146 is also another level I like to go hide between 100 and 123. But 123s, 138, and 161 is of vital importance to the market. Okay, so I want to know where those levels are on a bigger time frame. So when I start, I know from the pre-COVID lows back to this high of 48.18, should we retrace that 382 level will be of significant interest to the markets. All right. So we will hold that 382 level and the 50% level going forward. So for this exercise, I will hide my remaining levels because from a bigger time frame, I am not likely to go visit those anytime soon. Any questions so far? Okay. So next up, I am also interested in this retracement concept, right? So this is from here to here, how much can I come back? If I use the concept of okay, so now I'm starting to introduce a second layer in which the market could potentially identify pullback zones, right? So we know from a bigger time frame, my low to high, where my 3.8 comes in, where my 5.0 comes in. So those are going to be my baseline levels that will flow to any charts that I look at on an intraday basis. Now I am also concerned about a retrace using what's called which is considered a three-step process: pre-COVID high, COVID low, post-COVID high, right? So if I was running up and I hit a wall and I pull back and then I regain my footing and I hit another wall, where am I likely to come? Well, I want to use this move, this downdraft, if you will, to identify how far this downdraft can come, right? So the reason why I'm using the extension tool, if you will, is I'm measuring this previous downdraft up, how far back can that downdraft come? And if you're looking at the weekly, there's the 50% level downdraft, there's a 618, here's a smaller intermediate level, and remember that 3.8 level, 3,800? That is coming from a much larger time frame based on a very important level. All right? So we can see that price came and pierced through that important level, 382, but it was 100% retrace of this move, essentially. All right? So if I say, show me this move, that's about 35 days, 1,200 points, right? If we look at this move, you bastard. If we look at this move, it's about 23 days, 1,200 points, right? Everyone see the significance of that? So when we sold off, when COVID came on the scene and we sold off 1,200 points, and then we ran. So now you want to know if this should sell off, how far back, based on this sell-off before it found a support, is this sell-off likely to happen? $1,200 points, 35 days. $24 days, essentially 1,200 points, give or take 20 points, right? So now that's the second set of levels you want to carry forward with you. So since I've said 3.8 and 50 are important, I will not carry these levels forward. I will keep the 100, but I will remove everything else. Should they become necessary, I can come back and add them. All right. So now we're starting to get a picture of levels and why and where they come from and how important and how meaningful they are. So you guys keep hearing me say, why is the market interesting in staying above 3,800 at the moment? Well, we know 382 the market loves. So if it came down and tested and now it's bouncing back, there's a reason why it wants to get above 3,800. All right, any questions on that so far? So now let's take a look at your daily charts. So if you come to your, let's make this smaller now, we make that less. So now this becomes your weekly chart that becomes your reference point. So right now you're interested to know that 3,600 is your floor, should the market go crazy. It likes 3,800 right now as based on the price action here on the weekly charts. And should it decide to gain some legs, 40.75, and that long-term support I'm watching back here at 41.50. Okay. So now we move forward a bit. Now all these things are coming across to my daily chart. So we've done the big picture analysis back here in the overall market from a 30,000 foot level. We're now going to look at it at a 20,000 foot level. We're now going to get into it at a 10,000 foot level, and then we'll get into some intraday charts in a moment. So let's kind of clean up some of these lines. Settings, appearance. All right, don't need that. Price, time, get rid of rollover, get rid of Friday, and let's go to the years. All right. So now this is how your daily looks, how you do your analysis. All right. So as you can see, that 3,800, what is coming from my monthly. We're also seeing this coming from my intermediate levels from my weekly. And now that important level above 4075 is on the way back up, if indeed you found support based on a 1,200 point move based on this drop. 1,200 point drop from top to bottom, 1,200 point drop from top to bottom. If you indeed found support, then your move is back to the upside. So if your move is indeed back to the upside, you can then say, okay, just looking at the daily chart, assuming that this is a swing high to a swing low, where are you going to likely find first level of resistance at the 618 or at the 50? All right, 41.38, bigger term resistance on the way back up. And funny thing is, I've got that level mark. Price action told me that there will be some action there. So if I'm on the way back up, 4075 to 4150, that zone, price is really interested in taking a look at. So as you continue to trade SPX, be mindful that when you come into this 4150, 4075 zone, hence why we're looking to buy SPX 4075 or 3975, because I want price to be able to transact back up into these zones. And the homework that I did already tells me that price is interested in this zone. It came down, it tried to bounce. Price said, no, I'm not ready for you to bounce yet. Why? This told me I needed a 12-point move. So realistically, price is looking for a 1,200-point move. 1,200 from here to here, 1,200 from highs to some support point. And since it did not reach its 1,200-point mark, it needed to bounce, pick up some more sellers, essentially, and then get price down to that 1,200-point pullback zone. Okay, any questions so far? All right, so if your chart starts to get a little busy, you can determine which one of these levels you want to remove, but just be mindful that those levels are out there. I generally keep them. It makes my chart a little bit busy, but for me, they all have meaning and they all have value. And since I have another screen that is always showing me my weekly and my monthly and my daily, I don't care. I don't mind having all these on my intraday charts. I can quickly tell by looking at another chart or another screen what those levels are. All right, so now I've got my daily footing, right? So if indeed we are going to get a bounce back to the upside, then 50, 618, and ideally, your 382 is also important, all right? So target right now is looking for 4,000, 4,020. Why? You got price confirmation. When you got to that 3.8 level, you had a gap down. You had another gap down. So price got gapped in order to achieve that 1,200-point move to the downside. And then once it found that 1,200-point move to the downside, it says, okay, now let's do some consolidation and let's move back. Either 382, 50%, 618. Now, price will bounce back and forth, up and down until it gets to where it wants to get to. All right? Hence why you see these intraday movements up 100, down 75. Up 75, down 50. Right? Because it will take a zigzag step on its way back to where it wants to go. So as long as we hold 3,900 now, as confirmed by price action, right? Back here, 627, 628, 77, 78, and now 718, 719. So if this is indeed good testing and support below us, then if you're playing a W pattern, down, up, down, boom, you go. Your targets are going to come into that 618 level that you got from your weekly that is of interest to the markets. Does that make sense to everybody? Because I think it's important to understand that the markets are always interested in weekly levels and then daily levels. So every time I'm looking at levels on my chart, I'm looking to see where those weekly levels fall, so I can say, okay, that is a solid level that price will attempt to get to, either up or down. All right? So month, week, day gives you your core levels to which to start from. Now, taking that a step further, we can then start looking at intraday levels, meaning less than a day. And intraday levels of interest to me are always my 4 hour or 195, my 2 hours or 130, my 1 hour or 78, and then occasionally my 15s. Okay? So let's switch all these now. So all these will stay here. And let's start switching to intraday levels or intraday time frames. So let's use 4 hour. Let's use 2 hours. And then let's use an hours chart. Okay? Now, when you're day trading and you're intraday trading, it is important to understand and know where price is relative to your hourly chart and your 15-minute chart. 30 minutes is just as important, but I've come to learn that the hourly chart seems to carry a lot more weight in terms of what price is going to do looking at an hourly chart. Okay, so here your levels coming in on a 4 hour. And if you decide to layer in like RSIs, MACDs, and so forth, that will kind of help give you a better feel for what price is likely to do and move based on some of the things that I commented about yesterday, such as my 4 hour Momo was oversold. So price needed to either pause or just chop or fall to reset my RSI, which in turn creates momentum and so forth and so forth. But we won't get into that discussion. We can leave that for another day. But here's my 4 hours, my 4 hour levels, my 2 hours. And generally you can use your 2 hours for swing trades. I will use my 2 hours for swing trades, maybe 2 days, 3 days at the most. I will use my 4 hour to swing trade within the week. And I will use my hourly to swing trade overnight. Okay? So now let's take a look at the 4 hour chart. So we can see that price is very interested in 3,900. So we already got a level there at 3,900, right? Price is very interested looking left to right at this level as well, 39.42, 39.50. So you can mark the level on your 4 hour chart, but I will rely on the 2 hours to start drawing more intermediate levels. So looking at my 2 hour, so price came down and stopped at 3,900, great. So we seem to have an interest around 39.45, 39.50. Looking at this point here, 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 right? So I can see 39.45, 39.50 as a place of interest for price. So I can mark this right here. Okay. So I know if price decides to come back this way, it will show me, hey, I have an interest at this level, so heads up. Right? So that's one point. As price continues, we find 39.75, 39.80. Right? As identified by this gap down, this double tap before the gap and go, and also at this congestion zone once it came down and chopped for a while. It seemed to have found the floor here at some point before it lost it. So I will mark that as a potential area, that price. Could theoretically come back and visit again. All right. And let me show values so we can all see it. 3880. Let's see. So this one is 75, 65, 80, 77. Okay. So at this point, you can adjust plus or minus a point if you wanted to touch this bar or you wanted to touch the initial support when it came down, that bar. Those little nuances I'll leave to you guys. Okay. And then after 3980, we got 4000, which comes from something else that we did. 4075. If you want some intermediate levels, you can put in 4050 here, it looks like. So we can add 4050 here based on that bullish attempt that failed. So let's add this one. Okay. So now you're starting to get levels that will show up on a much smaller time frame. That has more meaning to you. Okay. So on a 2-hour chart, these are levels you can play if you're swing trading, looking to play SPX to the upside, assuming that you've got the right levels of momentum behind you and trends in your favor. Now you've noticed I don't even have an EMA band on here whatsoever because I'm not looking to have EMA influence any of my decisions as it relates to me identifying my levels. Okay. So then we get to 4075. We have a big space between 75 and 4130. So price seems to have found some level of support at 4100. So we can always add that. Then we found some interest at 4120 based on the congestion in here. You can use this as a floor. Floor coming down, bounce. Floor loss, tried to bounce to the upside. So 4113, 4115, 4120 could be a zone that you can add. Now you can look to your smaller time frame to be able to see within those bars where it makes sense to add those levels. All right, so you can say, I want to add it right about here. 4100, 4138. Then resistance here at 4165 thereabouts. Looking left. Whenever you have any doubt, always look left. This bar will confirm that 4165 looks good, so you can add that. This rejection here on this attempt to go higher is also of interest, 4200. You got 4217 that came from some other work that you did. Now you got a big gap between 4217 and 4256. And you can then use these candles in between here to say, okay, let me identify either 40 or 35 as a zone. Okay? And you keep stair-stepping up the same way, and then you can stair-step down the same way. And whichever of these levels you've identified that you'd like to keep on your chart, just leave them there. If you identify a level in your field by looking left to right, it's not overly meaningful, then you can remove them. So far, so good? All right. So now let's talk a little bit about, now that you've got monthly, weekly, daily, 4 hours, 2 hours, and hourly. Let's see now when we start throwing some fib work, how meaningful those levels are for us. So if I'm looking at a 1 hour chart or a 2 hour chart, let's look at the 1 hour. So on the 1 hour, we said swing high to swing low. You can then say, I also like this swing high to swing low for an upward move, right? So if I say, okay, here's the high from this congestion zone, high, to low, what do I get? See, anybody see anything interesting? Now you're starting to get some overlaps, right? You did some work previously that told you that 7.6 was an important level. And here you're doing some smaller fib work, and that 5.0 and 7.6 are now confluent. All right? And you're now starting to come into a 618 resistance zone at 39.60. Now, mind you, this is on a smaller time frame, so price will react to that 618 level, but it won't spend a lot of time reacting to it because it comes from a smaller time frame. It will respect that 7.6 is coming from a larger time frame, and ultimately this that's coming from a higher time frame. All right, everybody see how that makes sense? Smaller time frame price will react to it because it's an important level, but it won't spend a lot of time trying to figure out what to do next. It will look ahead either to an hourly chart, to a 2 hour chart, to a 4 hour chart, to a daily, weekly, monthly to see, okay, what I want to do, where do I want to go, and how much room do I have? If on a weekly or daily chart you are less than a 382, price will push to get to 382. If you're below a 50, it will push to get to a 618 because it respects those levels on a higher time frame. So price knows it has room to do what it needs to do, either to the upside or to the downside. Okay? So now you said this was the high, shorter term frame. This was the floor support. So if you're going to make a run to the upside, where are you likely to go? Well, there's 50. We tagged it. We bounced back from it. We claimed it. Now we're holding on to it. So in order for them to have the W pattern continuation that I love, they need to hold the 3900 pattern during tonight's overnight session. All right, so when SPX comes back in the morning, it needs to be holding 3895, 3900 if it's indeed going to continue up to 3960, 3980, and ultimately somewhere up here. Okay? Now, let's take a different scenario. Let's get rid of this. And this is what I always like to talk about when I say game theory. Okay, so keep in the back of your mind that 1,200 point move on a bigger picture has been accomplished, right? The last time ES pulled back 1,200 points, pre-COVID, COVID lows, we got 1,200 point pullback so far. So just keep that in the back of your mind. Now, if your thoughts are that this is still a continuation pattern to the downside, right? You will then say, all right, I will take my retracement tool because I'm looking for further continuation because you believe that this is a continuation pattern to the downside. And this is only a relief bounce. So ignore what we've talked about in terms of what you knew from a monthly chart and a weekly chart. Well, let's just say you come to a 1 hour chart and you're looking at this chart and says, well, this is a continuation pattern to the downside. And you say, okay, I will take this high to this low, back to this high. Where's my further downside continuation? Anyone see anything interesting? Where did the continuation pattern take you before you got a bounce? Everybody see that? Continuation pattern to the downside on this leg only. So I looked at the chart, assuming we have not seen this side of the chart yet, right? Had we not seen that side of the chart and I looked at this chart, and based on my analysis that I did on my monthly, my weekly, and my daily chart, it said we are still in a downtrend. Then I would have came to this chart and said, okay, this is the down leg. This is a relief rally. Where are you going to go to the bottom or further to the downside? And when I draw that continuation pattern, high, found my lows, relief rally, where do I land? Exactly at the fib that I drew, and within a few points of that 1-800 level that's coming from a much larger time frame that I had done. All right. So now you guys are starting to see how important it is that we pay attention to drawing your levels from a much higher time frame, weekly, daily, monthly, 4 hour, 2 hour, 1 hour. So when you start doing your fib work, if the levels that you've identified in higher time frames are valid and make sense, by you layering fib work will give you confirmation that, hey, all right, this makes sense. All right. And since we know by doing the monthly work, ES needs a 1,200 point drop, very similar to the COVID high to COVID low. And a 1,200 point drop will take me somewhere near here. And since I've accomplished the objective, then now I am looking to the upside. Because in my mind, looking at the 30,000 foot level, price have accomplished its objective. COVID high to COVID low, 1,200 points. All-time high to low, another 1,200 points pullback. Okay, so now that's being validated by the fact that we saw 36.63. It held. We have not come back and revisited anytime soon. We bounced up to the 50. It held. So now we're off and running. Okay. So now we can then say, well, now let's take a look to the upside. So let's get rid of this guy now. So if you just want to see where this retracement comes in, let's just say you pick that relief rally high. Let's show you my regular retracement tool. Let's pick today's high to the lows. What do we have? Spot on, damn near perfect, a level that you've drawn that's coming from a higher time frame, which now has meaning and value. Your fib work is now confirming that you've got a decent or very valid target. Price told you on this bounce that that level was important. So the next time you come back and visit, you best believe that price will have some reaction at that level. And the fact that it's a 618 from your relief rally, there will be a price reaction. okay? And then you can start layering your next leg up, all right? And you can start doing some smaller work, all right? So let's say continuation pattern. Start here. I ran up. I did some back testing. Where do I want to go? Anybody see anything interesting here? I start my run. I hit a known resistance that we had drawn some time ago. So price needs some help. It comes back. And when it bounces up again, where does it bounce into? A 618 level. So what is price going to do? Damn it, I need help again. Has to go back down, find some more help, and now it breaches that 618 level. All right? And looking at this is a W pattern, right? Boom, 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 upside. First leg down, lower high, got rejected because of a very significant level. It says, okay, fine, I need more help. It goes back and it finds help. It comes back to another level that was important, just shy of that 6-1. Still needs a little bit more help. Found it just above a level that you drew from the monthly, right? So that monthly 3,800 is serving as good support back and forth. It found it, gapped it, held it, is looking for continuation. And you can repeat this entire process on a 30-minute chart, on a 15-minute chart. You want to get more finer incremental levels to watch as you play throughout the course of the day. All right. So we're almost at the 2:45 mark. So let me open it up to questions and comments. So I got a chance to kind of answer any questions or concerns you guys might have. Anybody? Anyone? What? You mean you guys got all this in one shot? I'm surprised. Most people I do this with, they got a million and one questions. JT, Robbie, EL, you guys out there? Okay, we got one. JT, Robbie, you guys still there? Okay. So did everybody follow what I just did, first of all? Okay. Now, do you guys understand when I talk about what I'm looking for, what price is doing, why I say what price is doing? All right, so I heard a not really. Is that you, Robbie? Okay. So until you study price action on a longer term basis, you won't get a real good feel for these nuances up, down, up, down, up, down, right? Until you spend enough hours watching price and how it behaves to levels that you've drawn or to fibs that you are done and to sentiments across the market, you're not going to be able to pinpoint specifically, okay, is price going to pop today or fall today, pop today, fall today? There's a lot more that goes into determining why price is moving up and down in any particular day. And the more time you spend just watching price, and I mean just purely watching price, forget indicators, forget crossovers, any of that price-driven indicators. If you just throw a chart up and just watch the way price do, you will note one important thing. Price will always move. So I get my pen. Price will always move in a, let's do this, I'll use this one. Oops, sorry. That's a good one to use. Price will always move either up, pull back, up, pull back, up, pull back. Price will never move in a straight line, right? Let me copy this. So price will always have you move like this, assuming a bullish move. Up, down, up, right? And for those of you who know a little bit of Elliott wave theory, it's called basically ABC, sort of a movement in price. Price will always move up, some pull back to a 50% or 61% retrace, and then find the next leg to where it wants to go. And this pullback is a function of these levels that you guys have drawn. So if price comes into a 50%, 618, 76, 85, whatever levels you have determined, and price reacted to it, that reaction at that level is important to price. And what will happen, price will get there, it needs a retrace. 38, 50, 618. And if it really needs help, they'll go visit 76, 85, and then boom, off it goes. Okay? So these nuances in here when it pulls back is a function of levels that you've identified and price has established in the past. And those levels are based on large players, whales, institutional investors, and algos. If an algo made a bet of 10 million here at this level, you best believe he or she will try to defend it. Like I shared with you today, the whale that was betting on SPY, right? He took a loss today, and he had to roll his 369s up to 373. Today's bullish trend was too much for him to overcome. So he had no choice but to close his $10 million position and roll up to the next one. But if the markets were choppy, he probably could have defended his position and kept his 369 shorts. All right. So that's levels in a nutshell, and you can take that same process and you can then do it on a hourly, maybe a 30 minutes or 15 minutes, depending if you really want to be a scalp player. I generally do not look at anything below a 15-minute chart. And my key anchor chart when I'm intraday trading is my hourly or 78-minute chart. And my bigger anchor are my 4 hours and my daily chart. And then for context is my weekly and my monthly. Okay? So if SPX is going to play out the way I'm liking it to play out based on we haven't developed a floor at this point, then I am looking for a W continuation pattern back to the upside. And I'll be looking at my weekly and my daily chart to confirm for the week where I could likely go ahead of FOMC. Does that make sense for everyone? If you spend the time to figure out what price has done and what price is likely to do, and you've got the map before you show up to your desk in the morning to trade, you already know what is likely to happen. If this happens, if I overtake 38.80, I am looking for 39.15. Anybody remember my 39.15 for the day today that I talked about? It wasn't a random number. It came from doing this work. All right? So if you've done the work in advance, when you show up to your desk, you basically have, for what I call, the cheat sheet. If price does this, is what I expect. If it does that, that's what I expect. Anything else is noise. Right? And you can do the exact same thing on anything you want to trade. Any stocks, any ticker, you so decide. Spend the time in the quiet time in the evening, mark up your charts, starting from a high time frame to a lower time frame. Show up to work with a cheat sheet, see what price does, and play it accordingly. That's all I'm doing every day. If price does this, I do that. If it doesn't do this, I don't do that. Simple as that. All right? So we've got about another 7 minutes or so. If you guys don't have any additional questions or comments, I will wind it down. But essentially, this is a process I run through every day and every weekend, looking at where I think price is likely to go and how I want to play it coming into the week or coming into the day or coming into the afternoon or mornings. All right? Only my intraday levels. My weekly, daily, and monthly is on the weekends. So my intraday levels I don't want to pay attention to because I want to see how intraday price reacted to my bigger levels. And I only watch a handful of symbols, right? And the symbols I primarily try to watch are mega cap stocks, like the Apples, the Amazon, the Google, the Metas, the Microsoft, the Netflix, the Nvidia, the QQQs, SPY, SPX, Tesla. Those are my core stocks that I watch on a regular. I got scans that I run at the end of the day, at the end of the week to see if anything pops, and I run the same processes on anything that I have an interest on. Yes, product control comes in now. Once you've got a good handle on levels, then you can start layering other tools to give you a good comfort level. And you guys will often hear me talk about POC, and I do take it into consideration, but I've got a script that helps me identify POCs on my chart for me, so I don't have to sit there and watch volume profiles all day. If this stupid thing can load. And I keep that script on my 78-minute chart. Because basically, that script is looking at previous daily POCs for the last 22 trading days. So they do come into play when I am trading. So I will need to switch to MES. Let's see, that should be decent enough. Okay. So these green lines tells me where POC was in the last 22 trading days. So as price approaches a particular zone, I would like to know if there's a POC nearby. So yes, short answer, I do take point of control into account when I'm trading intraday levels. And you probably should do the same thing as well, right? Or if you want to have a separate chart for a volume profile study looking at a yearly profile or a monthly profile or a weekly profile or whatever profile you find value in, then definitely start layering that out in your setups. Just remember, don't overwhelm yourself with too much information points, right? Because oftentimes you'll have conflicting information and then it'll become very difficult to try and make a decision in the right way. Any other questions? No? Okay. So, go ahead. It is a lot of information, hence why I did it the way I did it. So just remember key things. Start with your monthly. Take a look at the chart without any indicators on the chart. What do you see in terms of pattern? Does it look bullish or does it look bearish? Next step. Find a swing high to swing low and draw your first fibs. Second point. If you see a large drawdown anywhere in your chart, try to understand why. What happened? Was it earnings? Was it COVID? Was it an important point in that ticker's history? So those create very important baselines. And once you've established those baselines, then you can start building out. That's the reason why I only trade or pay particular attention to a very specific set of tickers, right? Because I know exactly at what price point price behave a certain way because of something the company did. Either bad earnings, great earnings, litigation happened, merger news came out. All those things will affect a ticker that you're trading. And when you start to draw levels and identify levels, you want to know where those things are on your chart. Because if price reacted when those news hit, whatever it might be, it's of interest to you as well, either on the way up or the way down. So yes, I agree it's a lot, but always remember to start at a minimum monthly, weekly, daily. Okay? Understand the big picture. We were climbing. We were climbing, and wow, we fell off the cliff. What the hell happened? The first question I asked myself. I happen to know that was COVID high to COVID low, so that's important. We fell 1,200 points. That's important. Okay? Then we found the floor, and we ran. And now should we pull back, we could potentially pull back this 1,200 points. So I am tracking 1,200 points from top to bottom. Okay? Then you roll forward into the week and say, okay, what's important in the week? Then you roll forward into the day. What's important on the day? And then if you want to carry forward into intraday levels, then you repeat the process. But always keep this chart, month, week, day, somewhere visible where you can quickly reference it. Because these bigger levels are flowing to your intraday time. And if you're like me, like to keep all these levels, I can quickly refer back to another chart or another screen to see where these levels are that I deemed very important when I did my monthly, weekly, and daily homework. Okay? So absorb that, take that in, think about it, attempt to do some of this on your own, see what you come up with. You're more than welcome to share your charts that you spent some time doing it, and I'll be more than happy to share my commentary on what you've done back to you. This session has been recorded, so I will turn this recording over to the technical guys and see if there's some cleanup that needs to be done, and I will make this recording available to you guys. No, it's fine, not a problem, but I'm glad you got it fixed, so now everybody's great. All right, Ravi, you still confused? Yes. Yes. Okay. Well, absolutely. Practice, 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 practice. The only way you get to master this process. So I highly encourage you guys to practice. Just do random charts. Just do some random charts. Bring up a chart, no indicators, no EMAs, no MACDs, no RSIs, no stochastics, and just attempt to do this process we just did to see if you can identify levels and then go back and look at the chart and see what price did at those levels. Then it will start clicking. All right, EL, any questions, comments? You good? All right. All right, perfect, guys. All right, well, thanks for the time. We're a little bit after the 3 o'clock hour here, so I'll wrap it up here. And if you guys come across questions or comments that I did not cover during the discussion, do drop me a note, and I'll make every effort to respond or share with my thoughts relative to what you're inquiring or asking about. All right, guys, so have a great evening. Relax. I know your brain is overloaded with information, but step at a time. Maybe practice on a monthly and a weekly only at first and see what you can find, especially on tickers and symbols that you like to trade. All right, guys. Have a good night. See you guys in the morning. Bye.